And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson, they're the co-founders of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
I'm doing amazing. How are you doing?
I'm fantastic. Thank you for asking. Judd, how are you today?
Wonderful. It's great to see you again.
It's great to see both of you because I know that you've been so extremely busy. Obviously, the shows are doing so well for you, and I know you have a lot of new clients that you're helping. So thank you so much for taking the time to come in. Stewart, what has life been like in the office for you?
Well, you know what? It's actually a lot easier, to film these things now because my office is, 2 offices away from the studio here. So I can almost roll out of bed and come film, and it makes it easy. But no, we're having a great time, busier than heck, but enjoying the ride.
Absolutely. And Judd, what kind of questions are you hearing right now more than anything else?
People are concerned about the market. They want to know if this is the end of the bull market. They want to know what's happening on the tax side of things, where the current administration is going to take us. So a lot of uncertainty and worry, for sure.
Absolutely, that makes sense. We should also talk about everything that's happening right now, just with the current year that we're in. Let's talk a little bit about the Biden tax plan, Stewart. Can we touch on that a little bit?
Yeah, I think right now the Biden tax plan is really the centerpiece of most people's, concerns about planning right now. I just got off the phone with a client here right before filming, and her concern is, hey, I think we need to do this Roth conversion right now. Let's get this done. And I'm saying, whoa, hold on. We need to make sure that the plan is unveiled first before we take action. And we need to find out what the rules are actually going to be, because we do have some concerns that the plan is going to be retroactive. That, just remember that the tax increase that Bill Clinton, brought into, effect was actually retroactive to the current year. So what we don't want to do is start creating tax events that, create tax, events that are beyond our control. So we just really want to make sure we have a very predictable, outcome.
Absolutely. Judd, I have to ask you, so with all of these things that are happening right now, we've talked about the fact that these are going to affect people that are in the $400,000 and above bracket. Is that true?
Well, the hard part about it is we don't exactly know.
Okay.
When they first came out, they mentioned people making $400,000 and above. We didn't know if that was single individuals. Now what an anonymous source with the White House has said it will be married couples making $400,000 and above. The irony there is the current top tax bracket is 37%.
Okay.
But a married filing jointly couple making $523,000 or above is subject to that 37%. So does that mean those people are going to get a tax deduction or a drop in their taxes if it's only $400,000, or will they move the 37% people up into that next bracket, which would be proposed at 39.6? So again, you need to plan for either option, but we don't know what the truth is yet.
Stewart and Judd, you have some slides that you wanted to show the viewing audience as well, talking about the different tax brackets. Do you want to cue those right now?
Well, I think that what we wanted to do is take a look at a few things. When it comes to the tax brackets themselves, there were some pretty substantial changes. But I think what we have to look at as well is not just the brackets, but the market conditions that we're in as well. So right now we're at an all-time high in the market, right? And we've seen some volatility here. A lot of people are concerned, hey, is it time to sell? Is it not time to sell? And obviously there's some tax considerations there as well. Sure. I think the slides that Randy has available for us today are the fact that let's take a look at where we are in the market right now. So if we take a look, let's put into perspective where we are. This is the S&P 500, where we are right now. We're at the highest peak in market history, plus or minus a few percentage points. Okay. Everybody knows you buy low and sell high, right? But the reality at the end of the day is that nobody really knows where high and low are, do they? So I think it's really important to make sure that you put into perspective how much we've been able to grow over the last decade or so. The market's darn near quadrupled over the last 12 years, and sometimes it makes sense to take some chips off the table and really have a plan.
That makes sense. Thank you so much, Stewart. Judd, as far as tax planning goes, how important is that when you're looking at someone's entire retirement plan? How important is that component?
Well, I mean, I would say that, lots of times we'll discuss things as a stool or the various cornerstones of doing that planning, because in the end, people want to know that they're not going to run out of money. And part of that can be due to market losses. Part of that can be due to inflation. But a big piece that people know is out there, but they don't really know how to deal with it, is that tax piece, the portion that gets eroded to those taxes over time. And we talk about it with a married couple. If down the road, one of the spouses is going to pass away, that surviving spouse gets to keep the larger of the two Social Security benefits, but they have lost part of that income. However, when it comes to IRAs or required minimum distribution planning, they end up having to pay a higher tax as a single tax filer because they're still having to take that money out. So again, to know that, I only need to make 4% a year to never run out of money, well, you have to put an asterisk with that, because that's 4% at what inflationary rate, at what tax rate. So everybody's going to be a little bit different, and you're going to want to work with someone who has that expertise on the tax side to be able to build that full plan and give you those numbers.
Absolutely. And Stewart, what about capital gains tax? Should we talk about that a little bit?
Yeah, absolutely. So one of the things that we're seeing right now is a lot of people are realizing that, listen, our market is hot right now in Arizona, isn't it? We're at these amazing prices, so it really is a seller's market right now. And so a lot of people are saying, hey, does it make sense to take some of these chips off the table today? Well, maybe it does, maybe it doesn't make sense. Well, it was funny because Judd and I were talking about this during the break, where basically we had a client that found us as a referral from one of his real estate agents, and the real estate agent was actually trying to get him in contact with what they call a 1031 exchange company, and they had a very similar name to ours, totally different companies. But the guy comes in and he's like, hey, I want to do this 1031 exchange. And I said, well, it's not what we do. We're wealth management guys. We're tax guys. But I said, just tell me, by chance, why is it that you want to do this? And he said, well, I want to delay the taxes. I'd rather defer it for later, because one of the things when it comes to tax in the past has been that people just continue to 1031 exchange. Now, what 1031 exchange is when you defer capital gains from a capitally appreciating real estate asset. And then the thought behind it is that you renew the depreciation schedule, and then when you die, you pass it to the kids at what they call a step-up in basis, and that all goes away. All the capital gains go away. But as Judd was pointing to, one of the concerns that we're seeing now was the step up in basis may actually disappear. And once I presented it to this client, he said, yeah, why wouldn't I just pay a 15% tax today, realize it today if my kids are going to have to potentially pay a 39% tax, Sure. And so Judd was just, he was pretty instrumental in, putting a stop to this and really kind of stop the transaction. Yeah,
the piece that we're trying to get people to realize, Cynthia, is that they heard there was an announcement made of, again, capital gains taxes going up to 39.6% for those that earn over $1 million in that year. So someone making pretty good money or not making any money earned income-wise, but selling a large portfolio. What they don't realize, though, is that understand if it gets made very clear that those rates are going up, whether you've got $5,000 in an IRA, $100,000 in your 401k, if those people decide to sell before the end of the year, the market is going to suffer because of that. Doesn't matter about the economy, doesn't matter about the earnings, just like Stewart mentioned in real estate here in Arizona. When the market's hot, everybody wants it, it's going up. But when the market, in this case the stock market, if people are selling not because the market's bad, but because they know that they can get a discount by selling today, it's going to push those markets down. And we even saw that in the market when it first came out from the White House. The market was positive that morning, everything turned negative that day. So it's not just the people that are going to pay the taxes on that, it's the broader retirement accounts and investment accounts that people have that are going to suffer from that as well.
Judd, thank you so much. Stewart, you have a very special offer to give to the viewers at home today. Do you want to talk a little bit about that before we open up the phones?
Absolutely. So if you call 833-652-7829, what we're offering for the first 10 callers today is a complimentary portfolio review. Now, in that portfolio review, what we're going to do, since we're talking about capital gains, if you guys have a substantial real estate holding or a set of holdings, and you're really concerned about the tax implications of, hey, does it make sense to pass it to my kids this way or that way? Really, what we can do is we can do a full analysis of that tax concern for you, as well as any sort of investment portfolio you have as well. We'll take a look at all your fees, the expenses, the risks. We'll take a look at the whole thing, and that's completely complimentary. All you have to do is call 833-652-7829. We'd be glad to take a look at your portfolio.
Stewart, thank you so much. Judd, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, we're going to have so much more about how to plan your perfect retirement. Please stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Judd, I want to ask you a question. Obviously, I'm just very curious about this. What does it feel like when someone comes into the office? What can they expect?
Well, you know what, Cynthia, that's a great question, and I would like to take this moment to thank the time that we've had this show on the air. We've obviously been able to garner a number of new clients, so we certainly appreciate them. Thank you for watching. Thank you for continuing to watch. I would also like to thank those folks who have come in for a second opinion and know that we've done everything that we promised, that if you're in a great spot, if there's nothing there for us to do or fit in with, then everybody parts as friends. No cost, no obligation there. So when someone comes in to get that second opinion or that analysis with us, you're going to get a chance to sit down with Stewart or I. We will spend that time with you. Obviously, the more information you bring in, the more that we can do for you. But the reality is we're interviewing for a job. We'd like to be your financial planner for the rest of your life. So from that standpoint, we're going to sit down, we're going to answer all your questions, we're going to do the cash flow analysis, the portfolio analysis. We just want to make sure that you're not taking more risk than you need to survive retirement. We're going to look at those additional fees that Stewart talked about earlier in the offer. We're going to take a look at taxes. And again, not just the taxes today or tomorrow, but what they're going to look like 3 years, 5 years, 10 years down the road. If it's a married couple, again, we're going to look at what happens when one of you passes away and the taxes and the income change.
Okay. Okay.
And all of those things are handled. And again, if you need to come in more than once for us to sit down and get all of that done, we'll do that. And there's never a cost, never an obligation. And, we're just hoping to get that, additional goodwill out there. And we've had some great referrals come from folks who didn't need our services at the end of that first meeting.
Referrals are often the best testimonial, aren't they? Because people know that they love you so much, they want to pass your name along to other people. That is a great honor and such a blessing. It really is. Stewart, I have to ask you, what makes your company so different from everyone else?
So on the surface, I think it's really clear that we do taxes and most financial advisors don't, right? Like, we do some very advanced tax planning. We do a lot of really neat cash flow analysis. But I think even if you look even deeper, what makes us different than a lot of these, big box shops is that a lot of them have their in-house people that are picking the different funds. So you're sitting across the table, your advisor is there saying, oh, I like this fund and this fund, or this stock and that stock, and that's great. But what you're doing is putting all of your eggs in one basket, so to speak, based on what this single advisor believes is right or wrong for you. Now, what I've noticed, especially during the election, and listen, we are polarized in Arizona. We are truly a purple state. We have some very red people, some very blue people. And what I've noticed is going into the election, we had tons of clients that really said, oh my gosh, Biden's going to win, the market's going to crash, we need to go to cash. And even though we have a tactical approach to things where we move things out of the way, et cetera, the reality is that people's politics got in the way of them performing. And what we saw was, it wasn't just me. It wasn't just Judd picking positions for clients. We used some of these really, really great institutional money managers. We have the biggest money manager in the world managing some of our portfolios. We have an amazing algorithm portfolio that basically shifts into safety when they believe the volatility is high and the market has changed, right? We have some other tactical and strategic portfolios. But everybody knows you should be diversified. Everyone knows diversification, diversification, diversification. But what they're not realizing is it's not just about a diversification of the individual investments. It's also about having a diversification of perspectives being reflected in your portfolio. And at the end of the day, what we have at Asset Preservation is access to a ton of different money managers, because here's the thing. No one's going to get it right all the time. And when we're in this kind of volatile environment like we are today, it makes no sense. Listen, I jokingly tell people, you don't want me picking your stocks for you. And well, I don't know if it's much of a joke. You don't. What you do want is for Judd and I to quarterback the situation and say, hey, maybe, our core portfolios make sense. Maybe, it makes sense to look at our algorithm portfolio. But the reality is that don't have all your eggs in one basket. In a lot of these firms, what we see in some of them is it's just one guy's perspective buying it, right? Or it's the guy down the hall. And listen, we would save a lot of money for our company by just doing it ourselves, by letting me and Judd pick, funds and stocks for you. It doesn't make any sense at all. You don't want us. You want the best people in the world watching, or at least the people we believe are the best in the world at this. And I think it's really important to have that kind of diverse perspective so that if your Roth account gets it wrong, your IRA account gets it right. We've seen some really crazy stuff over the last year where some have really swung for the fences and hit, and some have missed. And it makes sense to not put all your eggs in one basket.
Absolutely. Judd, you have a very special offer that you would like to give the viewers at home today. Can we talk a little bit about that before we open up the phone lines?
Yeah, absolutely. So what we're offering is a complimentary portfolio review, analysis, full-blown written financial plan, whatever it is that you need. Second opinion. Obviously, we want people to come in. We want to take the time to get to know you, know your situation, get your questions answered. And through doing that, we'll put this all together for you. No cost, no obligation. Leave the checkbook at home. We just need you to call 833-652-7829. And Stewart and I will personally sit down with you, go through all of these elements, and put together a full-blown financial plan for you. for you.
Judd, thank you so much. Stewart, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. If you have any questions about how to retire comfortably, retire with confidence, Stewart and Judd have the answers for you. All you have to do is take the opportunity today to pick up the phone and call 833-652-7829. We have to take a very short commercial break, but don't go anywhere. We're going to have so much more when we return.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, talking about such an important topic, not only planning for retirement, but keeping in mind what the current tax situation is and what it could be in the future. Judd, I have to ask you a question. Let's talk a little bit about changes in estate planning taxes, if you will.
Yeah, I mean, absolutely. So again, kind of looking at those four pieces of the Biden tax plan, the other two portions that he talks about are, one is eliminating the step up in basis, and then the other one comes back to the estate tax. And those two are kind of interacted together. You know, one focuses more on assets that are not inside the IRA accounts, and the other, the changes in estate tax laws, focuses on both. So if you've got a couple $1 million in an IRA or a couple $1 million in a non-IRA, those are going to be subjected to much higher capital gains going forward. So right now, if you're an individual, you can pass on up to $11.7 million in assets with no estate taxes.
Okay.
The proposed changes for that would drop to $3.5 million for a single individual, and would be $7 million for a married couple. And now understand me, that's a very, very large amount of money. But again, if we're having to stay under that $1 million we talked about for capital gains, and you're going to pay estate taxes over $3 million, you need to be doing some planning right now. I mean, we always try and make our shows very well-rounded, so there's a little bit in it for everybody. But these are points that you need to have a plan in place. Not that you have to execute it before the end of the year, but you need to have a plan in place for what's going to happen over these next few years, because you are going to be giving away substantial amounts of money, whether it's from your pocket or your kids' pockets. And, you know, now's the time.
Stewart, what it comes down to is that basically by having a plan in place, you're putting up guardrails, if you will. It's kind of a safety net. So how scary is it for someone going into retirement without having a plan?
Well, I could never imagine it. And I think a lot of people, what happens is when they don't have a plan, they don't ever get to enjoy their money, right? Or they enjoy it too much and they run out. And so a lot of the clients that we see basically die with all this money because they were so scared to actually enjoy it, because they were scared they were going to run out, that they never got to actually go enjoy life. And, you know, I always say to people, you know, if all you're trying to do is impress your neighbors with this big balance sheet, you're not really the right client for us. What we want to do is help people enjoy retirement. You may be the right one for Judd, but not for me, for sure. But
I'm for everybody, man of the people.
No, but I think it's really important to say, hey, you know what? If you really want to, you know, have a clear path in retirement to go enjoy life, I think it's really important to just make sure you know the way. You know, and that is easier done when you have a plan. And we do some very in-depth cash flow analysis. You know, the nice thing is with all of our offices, we're right here. We're actually filming in our Tempe location here. We also have our Scottsdale location off the 101 in Shea, and we have our West Valley office there right off the 101 in Bell. So we are very available. We have tons of clients coming in, from the entire valley. We're starting to see a big influx of people from the DC Ranch and Silverleaf neighborhoods here that apparently word is spreading about the kind of planning we're doing. But it's really, really important to get that kind of planning done and to take a look at what kind of risks you're taking, what kind of fees you're paying, and we'd be glad to take a look.
Absolutely. Judd, once someone becomes a client of yours, how often can they expect to hear from you? And Stewart, of course.
Well, yeah, so what we've tried to do, and I think this is a little different approach than most advisors as well, is we want to always keep those lines of communication open. So you're certainly going to hear from us during tax season and related to tax planning, both, beginning of the year, mid-year, end of the year. A lot of our clients end up doing estate planning with us. So they're going to see us on that front, making sure everything's in place. And then financially, depending on where you're going and what the current market conditions are, you're typically going to see us at least once a quarter, if not more. And then on top of that, we put together some of these social events so that we're getting a chance to interact with our clients and getting a chance for them to interact together. Now, COVID had certainly had dampened that a little bit over the last year or two, but the reality is that we want to have those interactions so when something changes with our client, we know about it. It's not I don't want to bother them, or I need to schedule an appointment to do it. We get enough time around them that they're able to just reach right out to us. Most of our clients have our cell phone numbers, so that if there's an emergency, they're usually pretty respectful of it. But, we want to know that if you entrust us with your finances, with your retirement nest egg, that we're going to be there for you and that obviously you can reach us when you need it.
Thank you so much, Judd. Stewart, is it ever too late to get started on a plan for retirement?
I think now is the time. It really matters to just get started now. And listen, it may not be as efficient as it would have been if we started a decade ago, but you can't just be an ostrich hiding your head in the sand here. It's really important to have a plan. Some of our ultra high net worth clients have been doing that planning for quite a while. And just remember, the reason the wealthy stay wealthy is because they plan. And if you aren't planning, it's a problem.
Absolutely. And Judd, we have only just a little over a minute left in the show this week. Can you tell the viewing audience what they can expect to receive by being one of your callers today?
Yeah. Absolutely. If you give us a call at 833-652-7829, we're going to spend some time with you. We're going to give you that complimentary consultation at the office. You'll sit with Stewart or I in person. We'll be able to go over whatever your questions are, build that retirement roadmap, give you that second opinion. And like Stewart mentioned, if you're not planning, that's actually your plan, and it's not a very good one. So we want to make sure that you know where you're headed, and then you can make adjustments if needed.
And I love the fact that you've always talked about it's a no judgment zone. You've heard a little bit of everything, and you can help people navigate through whatever the future may bring. Gentlemen, thank you so much for another amazing show this week. To the viewers at home, most importantly, thank you for spending time with us. That number to call is 833-652-7829. If you have any questions about how to retire with confidence, Stewart and Judd have the answers for you. We want you to be safe, be happy, be blessed, and we look forward to seeing you back here 1 week from today. Thank you so much.